Hi everyone, welcome back to Saheb Academy. Today in this video we're going to start this new chapter which is called as Financial Statements of Sole Proprietorship with Adjustments. Previously we have understood this chapter without adjustment, the basic one. We saw many practical examples, the logics, and then two problems we saw. We completely understood that. But now we got to move forward and understand the adjustments as well. Right? So let's begin. Let's not waste any more time and let's get on with it. Now see here we have the concept of this chapter. It's really simple. The first question that should pop up in your mind is, what are adjustments? Adjustments are nothing but the last minute changes that you do before preparing the financial statements. Okay? And let me tell you, these adjustments will definitely go at least two places in financial statements, right? Let's just say, for example, there is an adjustment called as wages outstanding. Yeah, you don't know what that is. Don't worry, I will teach you later. Right now, just understand, wages is trading account item. So what will happen? This adjustment will have two effects, one in trading account and another one in balance sheet. Let's just say we have rent outstanding. Rent is P&L item. So one effect will go in P&L, other effect will go in balance sheet. Okay, why is this happening? Why dual effect, double effect? Because of our core principle of accounting, that is dual aspect principle. Whatever changes you do in accounting, whatever recording you do, you have to follow dual aspect principle. Yeah, isn't it? There will be a debit and there will be a credit, and both the effect will be equal. Similarly, in adjustments also, which you will do in financial statements, there also you have to do it in two places. Okay, trading or profit and loss, one effect, and the other effect in balance sheet. Is that clear? Simple. Now let's understand even further, what does adjustment mean really? See here, at the end of accounting period, we do some changes to the accounting records. Okay, like to update the balance of certain accounts and record the unrecorded transactions according to accrual basis of accounting. Okay, what is accrual basis of accounting? Accrual basis of accounting means we recognize income when we have earned it, right? Not when cash is received. We recognize expenses when we have incurred the expense, when we have taken the benefit, right? Not when cash is paid. Yeah, that's what accrual basis of accounting is. So what will happen is, when we are going to prepare the financial statements at the year end or at the end of the month or at the end of the quarter, at that time what will happen is our accounting records will not be in complete accordance with the accrual basis of accounting. There will be some problems, some inaccuracies. So because of that, we must do these adjustments. We must do some changes to accounting records, like to update the balance of certain accounts and record the unrecorded transaction on that day when we are preparing financial statements, so that our financial statements are accurate. They are in accordance with the accrual basis of accounting. That is the logic. Okay, why we always have to do the adjustment? It is a routine part before preparing the financial statements. Yeah, and then there can also be rectification entries which you have to pass and all that. Yeah, yes. Now understand, these changes which we are talking about, these changes you can do either by passing a journal entry, okay, which is called as adjusting entry. See, what will happen is, see here, accounting process, you already know this from the basic chapter. So here what happens, see, you have to prepare these financial statements. How do you prepare this? You prepare this from trial balance. Yeah, so this trial balance, when you are having it on the day when you're preparing financial statement, this will be inaccurate. This will not be in accordance with the accrual basis of accounting, right? So you have to take this trial balance and check everything and do the adjustments and prepare adjusted trial balance. How you will prepare adjusted trial balance? You got to pass the adjusting entry in the journal proper, and then all the balances will be updated. New trial balance will form, that is called as adjusted trial balance. This is first method. In your class 11 you don't have this, right? In your class 11 you have what? Directly doing the adjustments in financial statements. directly doing it in the financial statements. Is that clear? This is what we are focusing on in your syllabus. Is it clear? Simple. So see here, why is it necessary? Why, doing the adjustment is necessary? Because it ensures financial statements report accurate financial performance for the period. The profit or loss that is made by your business, it is accurate according to the accrual basis of accounting, and your financial position, how many assets, liabilities, equity you have, capital at a point in time. Fine. And financial performance you find in trading and P&L account, and financial position in balance sheet, right? This is the concept of this chapter. Now let me just show you the basics of financial statements. See here, you already know this, right? See, this is the accounting period, 1st April, the opening day, the closing day, isn't it? So according to the accrual basis of accounting, what do? Whatever expenses we have incurred in this period, we record them over here. Whatever income we have earned in this period, we record them over here. And then trading and profit and loss account, here you get to know the gross profit and net profit. Yes, so that is for the period, for the entire period, which ended on 31st March 2026. That's called financial performance, right? Profit or loss. Balance sheet shows a snapshot of the business, right? On a particular day, how many assets did we have, how many liabilities, what is our capital on that day, on that just particular day only at a specific point in time. That's called financial position. Yes, this is the basics of financial statements. And I just spoke about accrual basis of accounting. We must follow accrual basis of accounting, right? And if you are seeing any accounting standard, whether it's Indian GAAP, Ind AS, IFRS, US GAAP, or any other accounting standards, they always say you got to follow accrual basis of accounting, which is more accurate. Fine. Cash basis is not followed. What is accrual basis of accounting? See, I have written over here. Income is recognized when it is earned, not when cash is received. Expense is recognized when it is incurred, not when cash is paid. Fine. And then the matching concept. See here, income of the period should be matched with the expenses of the same period. For example, let's just say I have sold 100 of these pens in a year. So I have taken these sales in my P&L, which is completely correct. Now I have to calculate gross profit, let's just say. So can I subtract from this the cost of 500 pens which I have purchased in this year? Can I subtract cost of 500, saying that 500 is my expense that I have incurred? No. Understand, the expense of this year regarding pens is how much? Only 100 pens. 100 pens you sold, so you will subtract the cost of 100 pens only, which is called as cost of goods sold, right? The remaining 400 pens which are still lying with you in your stock, that is called as closing stock, closing inventory, which will go in balance sheet. Is that clear? That's the matching concept being followed, the adjustment of closing stock. That is why in trading account, on credit side we used to take in basic chapter also by closing stock. Why we used to do that? Because of this matching concept only, right? And accrual concept being followed. Is that clear? Yes. So behind the adjustments, the key idea is accrual basis of accounting. So I hope you have understood this. Now let's just go and understand one by one all the important adjustments, right? Let's go to the adjustments. Now see here, we have the important adjustments. Let's see them one by one and understand them. First we have is of closing stock. You all know what we have to do with closing stock. In the trading account, it will come on the credit side, and in the balance sheet as a current asset. For a practical example, see here, in the trial balance nothing will be there. In the additional information, there will be given stock at 31st March 2025 5,000, just for an example. So this is the closing stock. Closing date they have given, we can easily understand. Now here they have given us just one figure. Maybe they will give us two figure, cost and market value. How we have to choose? We have to choose lower of the two. If market value is 10,000, cost is, let's just say 5,000, you will take 5,000. Okay, in the trading account, see buy closing stock, and in the balance sheet closing stock 5,000. Simple. Adjustment will go on two places. Easy, simple. Next, what do we have? Next we have outstanding expense. Now what do you mean by outstanding expense? Outstanding expense means the expense that is due but not paid. For example, an employee is there who is working for us. The last month's salary we haven't paid, let's just say. The month has finished. He has worked for the entire month. We have taken the benefit from him, but we didn't pay him. So what are we going to do? Are we not going to record the salary in the P&L, that expense? Of course we have to record. Of course we have to record. Understand how it will happen. The junior bookkeeper will miss that. The payment has not happened, so he has not recorded, right? So we are going to record as a senior accountant. Okay. Another example, let's just see regarding the rent. See here, rent 5,000. Let's just say it is paid, so it is appearing in the trial balance. Junior bookkeeper recorded that. It has come in trial balance. But then later we come to know as a senior accountant that 1,000 rent is still outstanding. Our business haven't paid 1,000 rent. Yeah, 1,000 rent has not been paid. So now what we have to do as a senior accountant, we have to do the adjustment. What adjustment? See, the trial balance, this rent has been paid. It will come in the inner column, to rent 5,000. Simple. Then we are going to add outstanding rent to that, because 1,000 rent we haven't paid, but still we have to recognize according to the accrual concept, because the expense has happened. We have used the premises, the benefit has been taken, so we have to recognize that expense has been incurred. So the rent expense will be in total 6,000 in P&L. What did we do? We increased the expense. Easy. Then in the balance sheet we have to recognize that we have to pay rent. In the next accounting period we'll pay that, but right now on the year end we have to recognize a liability. We have to pay rent, outstanding rent, a current liability will be recognized, 1,000. Simple, easy. Now that salary example also same. The 11 month salary would have come over here to salary. The last 1 month salary which is not paid, which will be paid in the next accounting period, that will become over here plus outstanding salary. Yeah, entire 12 month salary will be there. And then here outstanding salary, 1 month salary which is outstanding, the adjustment one will come over here. Like that it is. Is that clear? Simple and straightforward. You understood what is outstanding expense, which is also called as accrued expense. Next, what do we have? Next we have, see, prepaid expense. What do you mean by prepaid expense? See, this practical example I'll give you. Right now if you go in a showroom bike, what happens? They will tell you to pay 3 years insurance premium right now only, or 5-year insurance premium right now only, right? If you pay that, let's just say 3 years insurance premium you paid at once, then what happens? In that case, you are supposed to recognize in your accounts that, 1 year insurance premium is my expense. The remaining 2 years insurance premium which I have paid, that is not expense, that is for future. So right now in the first year financial statement, these two is not expense. These two insurance premium is what? It is my asset. In the future I'm going to get benefit, so it's my asset. But what happens? The junior accountant sees that payment has been made of insurance premium. All three are expense only. Put it in the, expense account. It will go in the trial balance and it will appear. How it will appear? It will appear in the trial balance. Insurance 3,000. Do you understand this? Insurance 3,000. Like this it will appear. Then the senior accountant comes and finds out of this insurance premium which we have paid, out of this 500 is prepaid insurance. 500 is paid in advance. This 500 is of future year, of future accounting period. So what the senior accountant will say? Senior accountant will say, see, adjustment we have to do. We have to reduce the expense by 500, and that 500 we have to recognize in the balance sheet as an asset. Is it clear? Right? So see, what will happen? The trial balance insurance premium will come in the inner column 3,000, and then that prepaid you will subtract minus 500. 2,500 is the correct expense regarding insurance premium. Yeah, future expense is asset right now. Okay, so that future expense which we have paid right now, that will appear in the asset as a current asset, which is called as prepaid insurance 500. You see, the adjustment has gone on two places. You understand now what is adjustment, right? Directly we are doing the adjustment in the financial statements, and from your question point of view, adjustments will always be given in additional information, whatever that is given out of trial balance. Is it clear? Simple. Understood. Prepaid insurance also over. Next, what do we have? Next we have accrued income. What do you mean by accrued income? Accrued income means you have earned the income. You have right to receive the income, but you have not received it. You have right to receive. It has become receivable, but you have not received it. That is what is accrued income. For example, you invested in some government securities, you are supposed to get interest from them. Yeah, let's just say for example you got interest for all the months, all the 11 months. The last month interest you didn't get. Yeah, just for some reason you will get it in the next accounting period, but at the year end you have not got the 12th month interest. So what you're going to do, you are going to recognize that interest as your income only. Even if you haven't received it, what does accrual concept says? Accrual concept says, see, income is recognized when it is earned, not when cash is received. It doesn't matter, recognize the income. Interest income, recognize it. And if cash is not received, then recognize another asset which is called as, accrued income, that in the future we are going to get the income. Yeah, future benefit will be there, like that. So how it will happen? See, 11-month interest is appearing in trial balance, which we have received. Is that clear? Yeah, junior bookkeeper has recorded that. But as a senior accountant, we came and we saw at the year end, last month interest we haven't got. Yeah, last month interest we haven't got it, right? And bookkeeper also has not recorded it according to the accrual concept. He has missed that. It is not error. Bookkeeper purposefully, they will be given routine transaction. What money has come, record that. What money has gone out, record that. Like that the job will be, right? The important things will be seen by the senior accountants only. So this is important thing. So now what is happening? Senior accountant got to know 700 interest we are supposed to receive, but we haven't received. It has been generated, it has been accrued. Okay, so what is the treatment? Treatment is really simple. Trial balance interest income will go in P&L as usual in the inner column by interest 2000, and then we will increase this. We are recognizing that 700 also as a income only. Accrued income plus 700, that is equal to 2700. Then in the balance sheet, that 700 will be recognized as accrued interest 700. As a current asset you will take it. Okay, it is accrued income. Is that clear? Understood? So this is how it will happen. So see here, what did we do? We increased the income. Yeah, we increased the income and we recognized an asset in the balance sheet. Is it clear? Simple and straightforward. Now one more thing I will tell you. See here I'm telling you plus expense, minus expense, plus income. You saw how it is happening in P&L account, but it can also happen in trading account also. Okay, for example, let's just say in the case of outstanding expense, let's just say instead of P&L item, let's just say wages are there. Wages 5,000, outstanding wages 1,000. Yeah, if such a case arises, then understand what will happen. Balance sheet, same treatment. Outstanding wages would have come 1,000, but it wouldn't have come in P&L. Wages is trading account item. In trading account on the debit side, you will take 2 wages plus outstanding wages, 5 plus 1, that is 6,000. Like that you would have taken. Yeah, just from P&L it would have happened in trading. That's what. Yeah, in the beginning of the video I told you now, the adjustment will happen at least in 2 places, either in trading account or profit and loss account. One effect, other effect in balance sheet. That's what. Is that clear? Okay, moving on then. After accrued income, we have one more regarding this. Income received in advance. What is income received in advance? Income received in advance means, see, we have not earned the income. We have no right to receive, but we have received it. Yeah. For example, see here, what happens is, see, in the trial balance, we have a commission of 3,000. Yeah, commission, this is an income. It is given in credit balance column. So it's an income. In the additional information, they are saying 1/3 of commission received is for the work to be done next year. So what has happened? We have received commission of 3,000 from a customer. Okay. And in the additional information, we come to know that 1/3 of this, that means 3,000 into 1/3, that is 1,000. 1,000 among that 3,000 is what? It is for the work to be done next year. Yeah, we haven't provided the service yet and we have received 1,000 commission. Do you understand? So now what does that mean? It means if that customer comes, let's just say, and says, I don't want you to do my work next year, give me my 1,000 money back, then we will have to refund. No. Yeah, we have not earned that money. It is unearned income. We have received it, that's fine, but we have not done the work for it. We have not earned it. That is the logic over here. We have not earned it. Fine. So what happened when we got that 3,000? The correct treatment should have been that, 2,000 we should have recognized as income and 1,000 we should have taken it as a liability. But the junior accountant will not do that. It is not possible for him to do that, this complex adjustments and all. Yeah, at the year end we will come to know that 1000 worth of work is still remaining, so 1000 is received in advance. So now what we have to do as a senior accountant, we have to reduce the income and we have to recognize a liability. Reduce the income and recognize a liability. Is it clear? So see how it will happen. The trial balance commission income will go in P&L on the credit side by commission 3000 in the inner column. Then you will subtract, commission received in advance 1000 you will subtract. Yeah, 2000 is the correct commission income. And then in the balance sheet you will recognize a liability, commission received in advance 1000. You understood the logic now? Because we have not done the work, how can we say that 1000 is our income? We can't say. Yeah, we cannot recognize it as an income. We have to reduce the income and recognize it as a liability. That's the logic. Is that clear? You understood income received in advance, reduce the income, recognize the liability. Yeah, unearned income has been received, also known as deferred income. Yeah, in some foreign books you will see it is also called as deferred income. Okay, next we have depreciation. Now what is depreciation? You all know depreciation is reduction in the value of an asset. We have a separate chapter also on this, right? So depreciation you have to calculate. Let's just see, like this it will be given. See, in trial balance asset is there, machinery 50,000. Okay, then in additional information in the adjustment they are saying depreciate machinery by 10% per annum. What does it mean? Reduce the value of machinery by 10%. Now while calculating you have to see the date of purchase properly. Okay, sometimes they will give you date of purchase. You have to calculate the depreciation with consideration to time from date of purchase till the year end. Okay, we'll see that while doing the problems. Fine. So we calculate here directly only 50,000 into 10%, that is 5,000. So depreciation is an expense. Yeah, we are expensing the asset. So in the P&L it will come to depreciation. Adjustment now it will go on two places. Second place is here. See, trial balance machinery asset came in the asset only one place, 50,000. Here you will show the depreciation as a deduction also, minus depreciation 5,000. Yeah, easy. So 45,000 is the asset value. Yeah, you understood? Yes. So this is how you have to do the depreciation adjustment. Okay, got it. On the debit side of P&L, and then in balance sheet we have to show it as a deduction, right? So first 6 adjustment we have understood right now. Okay, take a screenshot. Now we have some more adjustment. Actually we have many, but we will do some more adjustments right now in this video, and then in coming videos we'll see the rest of the adjustments. Okay, so let's see the 7th adjustment now. Now see, here we have further bad debts, our 7th adjustment. What is this? FBD also we call it. So further bad debt means the bad debts that have happened at the last moment and no accounting of that has been done, right? So right now as a senior accountant we have to do the accounting of it. Fine. For example, let's just say before preparing the financial statements, we get to know one of our debtors has gone bankrupt. So that means we are definitely sure that we are not going to get any money from him. Our money is lost, irrecoverable. Yeah, it is a bad debt. But since no accounting has happened, it is called as further bad debt. Okay. So now how further bad debts will be treated? See here. In the trial balance, see here we have debtors 1 lakh, bad debts 9,000. Now these bad debts 9,000, this is normal bad debt which have happened in the current year and the junior accountant has completely accounted for it. Then in the adjustment, in additional information they are saying bad debts 1,000. What is that? That means further bad debts. Okay, this is your adjustment. No accounting of this has happened. So what you are going to do? Really simple. In the P&L, you will take the normal bad debts, trial balance 1, 2 bad debts 9,000. Okay, and you will add this further bad debts to that, plus further bad debts 1,000, that is equal to 10,000. Then the second effect will go in balance sheet. You will deduct it from the debtors figure. See, debtors 1 lakh minus further bad debts. Losses happen. No, you have to reduce the debtors balance also. Okay, minus further bad debts 1 lakh. So debtors balance will be now 99,000. Is it clear? This is how you treat the further bad debts. Now one thing you have to understand very clearly, okay, fix this in your mind. Never ever reduce these normal bad debts over here. Never do that. Okay, some students do that. They take these bad debts also over here and subtract. That is completely messed up. These bad debts are normal one. It has been completely accounted. If you go back and see in their accounts, you will find debtors were previously 1,09,000. These bad debts have already been deducted from the debtors. After that only debtors have become 1 lakh. Okay, so fix in your mind, you will never reduce these trial balance bad debts over here in the balance sheet. Okay, fine, understood. Further bad debts over, you understood the treatment. P&L debit side it will come, and then in the balance sheet you have to also deduct it from the debtors. Only the further bad debts, only FBD. Fine. Next we have, see the next adjustment, provision for doubtful debts, which we also call as PDD. What is this PDD, provision for doubtful debts? What is the logic of this? See, it's really simple. Let's just say, for example, in our business we have debtors of 1 lakh. Now you have a doubt in your mind that, see, 1 lakh debtors I have to receive 1 lakh money from various customers. Yes, but I have a doubt in my mind that 5% of this 1 lakh, which means 5,000, I'm not going to receive. Some people will go bankrupt, some people will run away, some people will cheat me over the period of time. So I have a doubt in my mind, 5%, I'm doubtful it will not come to me, that money will not come to me. Yeah, we have estimated this, right? See here, we estimate that a certain portion of debtors may not pay us in future. We have a doubt in our mind. Yeah, we are not sure, we have a doubt. Yeah, considerable doubt. So what we are going to do? Our accounting principle says, conservatism principle, if you have a doubt like this, yeah, and it's a considerable doubt, then it is an anticipated loss. Yeah, it is a future loss. No, you have anticipated it that 5% maybe will not come. So you have to record this anticipated loss by making a provision for it. Yeah. Now, how are you going to record the anticipated loss? The loss has not happened. The loss may happen in future. Right now you are just making a provision for it. What does that mean, making a provision for it? I don't know what does that mean. It's really simple. You are going to reduce your profit and you are going to create a provision, a credit balance account, which is called as provision for doubtful debts. Okay, so see here how it will happen. Profit and loss account debit. Yeah, provision is a charge against profit. Whether you have a profit or not doesn't matter. In profit and loss account you will debit it, right? See, like this, profit and loss account debit to provision for doubtful debt. This is the adjusting entry. Okay, but you don't have to pass this entry and all, directly we'll do in the financial statement, but here I'm showing you, yeah, the logic. Profit and loss, yeah, your profit will be decreasing and this provision will be increasing. All right, okay. So now what happened because of this? Because of this your profit decreased by 5,000. Okay, and then what you do also is you show this provision as a deduction from your debtors figure as well. Okay, see, two things are happening. If you see this clearly, profit and loss debit side, it has been recorded. Yeah, you are making the provision out of profit and loss. So your profits are reducing and your asset is also reducing by 5,000. So if you see carefully, what is happening is you are making sure that your profit and assets are not overstated. Why is it necessary? It ensures your assets and profits are not overstated. For example, see, let's just say you didn't make provision and all. You have a doubt in your mind that 5% money will not come. Later, yeah, in the next year or coming years, you see that, 5,000 losses happened. Suddenly you will get a heart attack. Oh shit, what has happened? I have lost money 5,000. But beforehand only, if you make a provision, then you have prepared your mind. Yeah, you have already shown the true value of your assets, that my asset value is not 1 lakh, my asset value is 95,000. 5,000 can be a loss in future. Yeah, so that's what you're doing. You're ensuring that in your financial statements, your assets and profits are not overstated. That is the logic of making this provision. Is that clear? Do you understand this? Now how it will be done and everything, let's just see practical example. The same further bad debts example, we will use this same example, just one additional adjustment we'll put over here. Create a provision at 10%. Okay, see here the example, provision for doubtful debts, PDD, right? The same example, debtors 1 lakh, bad debts 9,000, the same example I have taken. Just in the adjustment, if you see, create a provision for doubtful debts at 10%, right? So how it will happen? Really simple, really simple. See, bad debts 9,000, normally it will come in a column. Further bad debts are there, you will add 1,000, that will become 10,000. You know that already. Yes. Provision, how you will create? See, come to the balance sheet. I will show you how you will create. If you come to the balance sheet, you will take the debtors figure 1 lakh. Okay, you will take the debtors figure 1 lakh. First, further bad debts you have to reduce. First, further bad debts you have to reduce. Minus 1,000. Always remember, deduct the FBD first. Fine. 99,000. Now, on this 99,000, you will create the provision. On this 99,000, you will create the provision. You have a doubt that out of this 99,000, 10% will not pay me. This doubt you have in your mind. So you are creating the provision. You are reducing your asset by 10%. Yeah, 9,900 you have reduced. So your accurate value of your asset is being displayed over here. That is 89,100. Okay. And then at the same time, this anticipated loss 9,900. Yeah, how you have created this provision? Out of profit and loss. So here also you have to show it 2 PDD. Yeah, I told you now, profit and loss account will be debited. See, profit and loss account is getting debited because of the provision 2 PDD 9,900. PDD means provision for doubtful debts. Like this you have to do it. Is it difficult? It's really simple. Two things happened. P&L debit side it came, and then balance sheet we showed it as a deduction from the debtors value. You understood? This you have to do when you are creating new provision and there is no old provision in the trial balance. There can be old provision also in the trial balance. We'll see that next case. Let me show you. Let me take you more advanced level from this. Yeah. What if there is old provision also? If there is old provision, then we will make use of one shortcut I will teach you. It's really simple. See here. This case you have to see properly. Trial balance. In trial balance, debtors 1 lakh is there. Bad debts 9,000 is there. Same like previous question, but there is provision for doubtful debts already existing in the business. How much? 5,000 provision is already there, right? It is there in trial balance, as you can see. And then in additional information, the same adjustment, bad debts 1,000, create provision for doubtful debts at 10% they are saying. Now what you will do? See, I will tell you to make use of one shortcut, and I will teach you the logic of that shortcut. Okay, first let's just go to the balance sheet. If we go to the balance sheet, forget about the P&L. Okay, don't do the P&L first do the balance sheet thing, calculation. In balance sheet, right, in balance sheet, debtors you will take 1 lakh, right, as usual. Always deduct the further bad debts first. You deducted the further bad debts, yes, and then what you will deduct? See, 99,000 you got, then create the provision. Provision you have to create at 10%. No, create the provision. 99,000 into 10%, that is equal to 9,900. The same thing happened, no, in balance sheet? Yes. Now what you have to do? How much will hit the profit and loss? Yeah, in profit and loss, what will happen? There you will use the shortcut. What is the shortcut? Shortcut is really simple. New provision plus the expenses of current year, which means plus bad debts plus further bad debts minus old provision. This is what you will do. Okay. So see here, really easy. Let me show you. See, 2 PDD you will write, 2 provision for doubtful debt, 14,900. How 14,900 came? I did not understand. Really simple. See, first I took the new provision for doubtful debts, which I got from over here, 9,900. I calculated this, isn't it? I calculated this. So 9,900 I took, plus bad debts, plus further bad debts. Yeah, bad debts are there in trial balance, 9,000. Further bad debts I got from over here, 1,000. Minus old provision for doubtful debts, old PDD 5,000, yeah, which was there in trial balance. Yes, only one figure I calculated, remaining 3 was there in the question. So I did that, I got 14,900. Yes, so this 14,900 will hit the profit and loss. Now you will ask me, what is the logic of this? What is the logic of this shortcut? We haven't seen this before. See, it's really simple. In practical life, this is what happens. Whenever old provision exists, what happens is, see, whenever old provision exists and bad debts occur in the business, we take the bad debts not directly to profit and loss. No, we take it to provision account. See, this is how it will happen. Provision for doubtful debts account, which is a credit balance account. Okay, opening balance, closing balance, and then whatever bad debts have happened will come over here. Then as a balancing figure, we'll find out one figure which will hit the profit and loss. Maybe we might have to increase the provision or decrease the provision. That's what happens. If you have to increase the provision, then the PDD will come over here. If you have to decrease the provision after doing this ledger account, then what will happen? 2 P&L will come over here, 2 P&L. So in profit and loss, here it will come by PDD, like that it is. So instead of doing the ledger account, which is a little bit complicated, I say use the shortcut. How much will hit profit and loss account? What you have to do? New provision for doubtful debts, which you have to calculate. Yeah, take that figure, add the bad debts, which is given in trial balance, and then add the further bad debts, which is given in adjustment, and then subtract the old provision, which is given in the trial balance. That's what we did. No, that's what we did. New PDD we calculated 9,900. Then bad debts and further bad debts we got from the question. Old PDD also we got from the question. After doing this, we found out a positive figure of 14,900. So we debited that in P&L. We got a positive figure. That is very important. If you would have got a negative figure minus 14,900, then here it would have come by PDD 14,900. Do you understand? This is how it is. Okay. If negative, then take it on credit side of P&L account. Is that clear? Really simple and straightforward. All right. You understood this? Okay. Now one more adjustment. Yeah. You understood now? Two cases I explained you regarding provision for doubtful debt. First, when there is no old provision, at that time really simple we did. Yeah. Separately we did. Yeah. Separately. First time we are creating provision for doubtful debts. So separate entry we passed for that. Separate posting. Bad debts also separate. Bad debts directly went and hit P&L because there was no old provision. When there is old provision, what happens? Bad debts first come into PDD account in this ledger account. Then one hit goes from over here to P&L. Okay, as we saw in the case B. Yeah, case B. Is that clear? You can take a screenshot if you want to do proper comparison how different it is. Case B, old and new PDD. All right. Now after this, I have to take you to one more toughest adjustment you can say, right? That is, I mean toughest means it is not tough, but I am taking the most toughest example. Okay. So see, next we have provision for discount on debtors. Now what is provision for discount on debtors? See, here we were making provision thinking that there will be bad debt. Yeah, there will be some people who will not pay us. Bad debt may happen. Yeah, 5%. I told you, 5% bad debt may happen. That's why we were making provision over here. Here we are making provision because we have a doubt in our mind that in future what will happen is there will be, some debtors to whom we have to give discount. Yeah, to get the early payments from them. See here, same concept as above, except here the anticipated loss is because of in future we may allow discount to debtors to get early payments. Yes, that's what happens. To get early payments, what we do, for example, from one debtor, let's just say we have to get 10,000. What we will say, see, you don't give 500, pay me right now only 9,500. Yeah, so he will pay us 9,500, and then remaining 500 rupees which we didn't get, that is loss for us. We call that as discount allowed. You all know that. So that discount allowed is loss. No, because of that what happens? A loss, and then debtors figure also goes down, isn't it? We get less money, no? So that's why what we do here also the same way we create a provision. Yeah, same way, profit and loss account debit. Yeah, this treatment only, profit and loss account debit to provision for discount, on debtors. Okay, but here in short form we will call this as PD, just PD. Okay, remember that, just PD we will say. For provision for doubtful debts we will say PDD. Is that clear? The treatment is same only, the same thing you have to do, but you have to understand the chronology and everything, right? So let's just go and understand the toughest example. See here, this example is there, no? Case B8 example, provision for doubtful debts. On this only we will build. On this only we will build the discount example. Okay. See, the same question, the same thing will be happening. I will keep this at the side. Now see, discount example is coming. In discount example, what is happening? The same trial balance is exactly same as you can see. Yeah. In the adjustment, what has happened? In the adjustment, one extra adjustment has come. Create provision for discount on debtors at 2%. Yeah. Isn't it? Only one extra thing has come. So now what will happen? See, very easy. See, first go to the balance sheet. Debtors 1 lakh you took. Further bad debts, first you have to subtract as usual. 1,000 you subtracted. 99,000 you got. Same way, right? Then you will subtract the PDD 10%. Yes, because PDD we have to create now. Second adjustment is there, creation of PDD. Yes, we did that. Then we have to create the discount. Always remember, discount will be created at last. Yeah, provision for discount will be created at last. Fix this in your mind. Minus PD, provision for discount, 2%. 2% on what? This is also very important. 2% on this. After deducting everything, whatever figure is there now last, 89,100, on this you have to calculate 2%. So see, 89,100 into 0.02, that is equal to 1782. So 1782 will be our what? Our provision for discount. Yes, is that clear? Then you will subtract that from the 89,100, you will get 87,318. Is it clear? This is your debtors balance now after doing all the adjustment. Is it clear? Yes. Now what will happen in P&L? Really simple. Understand. In P&L what will happen is, see, the shortcut you will use regarding that, because old provision for doubtful debts is there, new provision is there, yeah, further bad debts are there. That same shortcut you will use. You have got 49,900 only. Yeah, in P&L you will keep these two things separately, PDD separately and PD separately. Okay. So regarding PD, what will happen? Simply 1782 now. First time you are creating the provision for discount. So separate posting will come of provision for discount. To provision for discount 1782. Is it clear? Simple and straightforward. Now you will wonder one thing. Sirs, you told us that all the adjustment will go two places. Yes? Yes, it will go two places. Understand properly. The further bad debts have come over here as well as in this shortcut also now. Remember it like this, okay? Remember it like this. Further bad debts have to go on two places. It has went in the P&L as well as in the balance sheet, right? And then create the provision, new provision. New provision is coming over here also, and then over here also new provision. See, 9,900. Yes, but the trial balance items will only go one place. The debtors has gone only in balance sheet, right? And then bad debts trial balance was 9,000, only in the P&L you can see 9,000. Yeah, and then the old provision has gone only on one place. Old provision, see 5,000 provision now, only in the P&L 5,000. You understand? Yeah. So this is how it is. So here we have completed 9 adjustment with great examples, illustrative examples, right? I hope you have understood. Now just take a screenshot of this. Yeah, take a screenshot of this. Fine. And then if you want screenshot of these, then see here further bad debts we have, right? Then on this only we built our case A example where we created new provision. There was no old provision. Then we had what? Old provision as well. When old provision came, what happened? See here, when old provision came, we had to use the shortcut. Then discount came. When discount came, we had to do the discount at last. Just do the discount at last and then separate posting of discount over here. Is it clear? Simple and straightforward. So that's all for this video. I hope you have understood each and everything. Yes. And then the ledger account also I have explained over here. Old provision, new provision, bad debts, the trial balance one, as well as further bad debts, and then balancing figure as profit and loss. And these are the formulas to calculate the new provisions. Yeah, I have just written over here. You know how to calculate already. I told you now, first do the balance sheet thing. If you do the balance sheet thing, directly you will get to know. Yeah, see what is happening. How you will calculate new PDD. To calculate new PDD, you have to take the debtors. See, have taken the debtors minus further bad debts. See, minus further bad debts. Then whatever you get, on that you will calculate the PDD percentage. See, into new provision for doubtful debts percentage. Yeah, this thing only I have explained in form of text, right? In form of formula. Then new provision for discount. How you will calculate new provision for discount? See, really simple. They said 2% discount, you have to create 2% discount provision. So first you have to do all this, right? Debtors minus further bad debts minus PDD, new PDD. Yes, all this you have to do. Debtors minus further bad debts, same. And then this PDD also you have to subtract. Then into discount provision. See, 89,100 into 2%, 1782. Yeah, this is 1782. Like that. Easy. This is how you have to do it. Fine. So just take a screenshot of the shortcut as well. So that's all for this video. I hope you have understood. Okay. See you in the next video. We'll see the problem. Bye.